So back in May, I met with Thom Payne to discuss the energy outlook and in particular how OPEC was impacting the market. 4 months on, I have the opportunity to meet with Thom again and hear how things have moved on.
Thank you, Edwin. Well, consumption for liquids remains strong at all-time highs, and we are still relatively bullish about the uptake over the next 5 years. General consensus that liquids consumption increases by 1.4 million barrels a day in 2017, and with an average of 1.2 million for the next 5 years. Obviously, one of the hotly debated topics is the role of OPEC cuts. As we all know, OPEC agreed to cut 1.8 million barrels a day of supply. Recently, that cut was extended into the second quarter of 2018. There are still concerns that this cut was not deep enough, and we have the leading lights of OPEC, Saudi Arabia, Kuwait and the UAE, discussing extending these cuts once again for the remainder of 2018, but also deepening the cuts as well, so a deeper cut than the 1.8 million barrels a day. Compliance is still relatively strong. We had a bit of a turbulent time in June and July, but for August we have expected a compliance around 94 to 96% for the OPEC states. But interestingly, it has been some of these OPEC guys that have been at blame for some of the issues that we've seen in June and July. We've seen Iraq continue to be a bit of a problem child, particularly in the Kurdistan region, but that's been more than offset by more aggressive cuts from non-OPEC members such as Azerbaijan, Kazakhstan and Russia. So hopefully if OPEC can keep this compliance in place and deepen the cuts, it should put us in a good position to see some positive news for oil prices into 2018.
And on that note, where do you forecast the oil price will be at the end of the year?
Well, over at $56 for the Brent barrel today, we probably won't move too far away from that in our opinion. Probably 55 to 56 is a good bet.
And if I can push it with one final question, where would you expect it to be 1 year hence?
1 year hence, again, we're probably staying in this $45 to $60 corridor is what we're calling it for the next 2 to 3 years. So again, this $54 to $55 mark probably makes sense for 2018 as well. But obviously there's a lot of wild cards at play, particularly with the current administration in the White House.
So a stable assessment for the year ahead from Thom Payne. Perhaps we can catch up again in 4 months and see how close to prediction you are.
Sounds good. Thank you.